The broadcast is now starting. All attendees are in listen-only mode.
But you can see today they've been trying to bounce the market, and it's just looking grim. There was a sharp break earlier, and then you've rolled over and gone lower, and so now this is looking pretty grim, at least in terms of trying to find a bottom. And I'm not sure where you start to see a bottom come in here. Do you, Dr. K? I mean, I guess the S&P is approaching the 200-day line, and that would be probably a spot where you might look for some sort of a bounce. But the other thing is what I'm looking at here, and this is a possibility too that I'm looking at, is that you undercut, the NASDAQ will undercut these lows and hit its 200-day line. At the same time, the S&P, which is down here, come back here, will drop below its 200-day line, and then that might be where you finally get some sort of a low in the pattern. And for now, though, it's very tough to say, where this thing is going to bottom, because you're in free fall right now, and you really haven't. Even though yesterday you're down 1,000 points, Monday you're down 1,000 points, more than 1,000 points. Even though you've had that, that's really only like 4%. So you haven't had a washout where you're down just a huge amount, and we're only down. What are we down off the peak right now? Like 10%.
Yeah.
So
roughly.
you could have a lot more downside in here, and so I think you could, like I said, I think you could get 1,000-point down day. Someone's saying, why would a safety trade like TLT show this kind of weakness? Because it's a general liquidation. Everything is being sold. Nothing is holding up, and everything is being sold because for some reason cash has to be raised, and institutions are liquidating stock like they're hot potatoes, and that's basically the bottom line here.
And
There's
it's
no
also
two ways about it. That's what's happening. It's a general liquidation. That's what it felt like the other day on Monday when you just kind of fell out of bed, and they were unloading stock right into the close, and you saw the market coming down. In fact, I was texting my daughter and taking pictures of my quote screen every 100 points down from minus 400 on Monday, and sending them to her and just showing her how the market was dropping, because she was telling me how she misses, she's at college, and she misses listening to me talk about the markets and at dinner time and stuff like that. So I decided to give her a first-hand experience of a market dive, and that was very interesting to watch. You were coming down, minus 400, minus 500, minus 600, and then she noticed that as we were getting down to minus 900 or so, it started to accelerate. So I was sending her a photo every like 2 minutes, it seemed like, and then we got down to almost minus 1,600 before we turned. Somebody's wondering why your MDM hasn't sent out a sell signal. Is it still in cash? I guess it is, but
yeah, no,
go ahead. I'll let you answer that, Dr.
So much volatility in this market that you flip a coin, and we're not in Vegas, so when it senses a better opportunity, it certainly will take advantage of it. But right now, there's so much noise in the system that, and this goes for a lot of traders too. And we said this actually, one of the PMPs, that sometimes it's better to sit on the sidelines and wait it out until it becomes a little bit more coherent. And I wanted to make also comment on, first, the TLT, that does telegraph that the rates are on the rise, and it's been doing that for some time now. So I think that is spooking the markets. That they don't like the idea that these central banks are going to start hiking rates in the face of an economy that they claim is strong enough to withstand that, but a lot of the reports are doctored, so I don't think the economy is as strong as governments want to paint it.
Oh, not at all. I think that's all BS.
Markets are a lot smarter than any government, so the money's going to flow where it needs, and we're seeing it flow out of TLT. That means higher rates ahead. Now we're seeing the money flow out of everything right now. And keep in mind, in 2008, nothing was sacred. Even gold, which is the fear trade, got taken down with the rest of the market. So sometimes you might want to be in cash during these kinds of extreme periods. If we get another one like that, obviously being on the short side would be great, but at least if you're in cash, you're not going to get beat up. So keep that in mind. And also, as far as the MDM, it's obviously better to be in cash than to be on a buy signal during times like this, and take your profits if you can. Same goes with stocks. But of course, in this kind of market, we haven't seen a real good sell signal until now. But you want to be able to be on top of these things. So you don't want to start selling as the selling accelerates like it did the other day, because that might be a floor. We've seen the floor achieved so many times in the last couple of years, and QE is still flowing in a big way. So you got to keep that in mind, that this might not be the great bear market that rears its head right now. Maybe it comes in a few weeks. We don't know. But right now we know that there's going to be a lot of volatility ahead. That means the markets can swing up and down. And unless you're a really nimble trader, and MDM is not designed for day trading, then you should probably stay out of the markets.
I figured that was the reason why the model hadn't really changed. I mean, even to me, it's like, even if you're short, like yesterday, for example, early in the morning, you got a nice breakdown, and then everything started to rally back. So it looked like we might turn and rally, and you saw certain names start to turn back to the upside. And then it all petered out in the last half hour and just died. The same thing the day before. So the intraday volatility makes it extremely dangerous to operate, and you've got to be really quick. And if you're slow, you could end up getting punished pretty badly, because it looks just too unstable. And I think that's really the point here with the MDM not changing signals. So anyways, we're down 268 on the Dow. I think you're just going to head lower all day. And I was wondering, what was that sudden dropout? Did you see that, Dr. K? There was a sudden dropout earlier this morning, and it almost seemed like a fat thumb trade, and everything just kind of dove, to the downside, and then it all rallied back, and it looked like you're going to turn. I think you're up 100 or something like that, and then boom, it heads back the other way. Now we're down, going the other way, and the volatility is crazy. So now I think you have a bunch of trap longs probably in the way. But I mean, like you were showing, like we were talking about earlier, Amazon, we said use the 20-day as your stop. On all of these, the 20-day, you would have been forced out on Monday, because except for Netflix, which held the 20-day, Nvidia even, it was able to hold its 50-day, but you would have been stopped out, I think, on this on Monday when it busted the 20-day. That just comes off really hard, and it drops below. This is what's interesting here. It breaks below the breakout point. Okay, so that looks pretty bad. And then it drops below the 50-day. So this looks like it's just failing outright. But then it finds its feet the next day underneath the 50-day moving average, and it turns back to the upside. And it rallies all the way back up to the 10-day line, then comes in yesterday, and now today it's rallying because of earnings, I guess. Yeah, they had a good earnings report, and so they raised guidance, I guess. And so the thing jacks to the upside, but that just becomes a short sale opportunity to me. I mean, you just hit it right there and the thing reverses. So anyways, it's just pretty crazy right now. So we're down 283, Nasdaq's down 1%. So I still think this could get a lot worse. It's really hard to say one way or the other. I suppose I could try and rally it, but in general, it just looks dangerous, to try and step in long, because they could take you out. We could have a flash crash, and you're going to be sitting there watching your stocks go down 10 points and not being able to do anything about it. So my tendency here is to lean to the short side, obviously, and because I think the line of least resistance is clearly to the downside. That's kind of obvious. And there have been some good trades, like on Monday, there are some good trades off of support, and those would have worked if you're a nimble trader. But I think that's pretty much all you got here. You're either nimble or you're going to get run over. So, and even then, it's not all that easy. So. Any other questions?
All the volatility always makes it challenging. But what's interesting is that we started the day with the markets looking like they wanted to bounce. The advanced decline on both the New York and Nasdaq were something like 15 to 11, up to down.
Yeah.
Now that's just completely inverted. I mean, on the Nasdaq, it's 240 names up to over 2,000 names down. So that's almost 10 to 1.
Yeah, it's pretty bad. So, Do we have any questions about specific stocks that anybody's interested in? I don't really see anything to be interested on the long side. I mean, I guess you could try, like I noticed Twitter is trying to hold the lows of yesterday's gap up move. We didn't put that on because we thought it was a little erratic, but it's sort of slopping around right now. I wouldn't be surprised if it came in further, so we'll see what happens. So the other one that we didn't put out was Snap, and this is mostly a short covering rally, and the thing is coming back in fast. So, you know, who knows what this thing's going to do. I think it's mostly short covering rally. I don't think there's a lot of upside after the Bible gap up day, and you really squeeze the shorts pretty good that day. So, you know, we'll see what happens from here. Now we're trying to rally. But you see, this is what you get. You just get this crazy, crazy volatility where things start flying in one direction and then they fly in the other direction. And the net result is that things in overall are just coming down. Now we're down 192 on the Dow. It's trying to flop the other way. You know, I guess they could spin you around if you're trying to trade and thinking you're going to pick off a low, and you buy something, it starts to go up a little bit and then it rolls back over. Square's a good example of that. You know, it looked a few times today like it might turn around, but it never did. It just got hammered, and it's heading lower now. It's undercutting this low. I don't know if that means you're going to get a some kind of an undercut and rally move from here, but I think it's basically dead in the water, as everything else is. Snap BGU. Well, I mean, Snap was a BGU if you wanted to play it that way at 17 bucks at the opening. So, but you know, whether it has longer term potential outside of a BGU is, you know, one day BGU is sort of questionable. So, I don't know. This market is crazy, utterly crazy. So, what else? We're down 220. We're going lower. We're going to go lower. I predict we're going to be down 2,000 points at some point here before we bottom. That'll take the S&P well through the 200-day moving average, and the Nasdaq down to its 200-day moving average, and then that'll be all she wrote. We'll see what happens. It's just crazy.
Yeah, with this much selling momentum, and I mean it's clear, you know, the big institutional footprint is all over this sell-off. I would think that you know, maybe it's enough to burst the bubble, this sovereign debt bubble, this QE bubble. You know, it'll be interesting, but right now things are looking pretty bad, and so yeah, we could get some sort of capitulation, easily 2,000 points down on the Dow.
Yeah, I also think the flip side of all that QE stuff is that the budget they go and pass a budget resolution agreement or something the other day, and they've agreed to raise the deficits to over $1 trillion starting, I think, next year or the year after. But you know, all of this is reaching a point where how much further can it go? You know, and I think that's a question. So somebody says, I have to ask about crypto thoughts, basing. If you want my opinion, I think Bitcoin topped, and I think if it comes back, it's going to take a long time before you see it come back. And I would like maybe you can explain this to me, Dr. but I don't see any reason why the intrinsic value of Bitcoin should be 100,000 or 1 million or even 20,000. You know, it's supposed to be a medium of exchange, but people got carried away with it, and it strikes me as a classic bubble. You know, and right at the top, and this is anecdotally different than the other tops, you have people being, you know, hailed as geniuses, high school students who bought it being hailed as geniuses, and they're all saying, oh, you never sell Bitcoin. You know, I think you trade it, but I don't understand. I understand blockchain technology is very key, and some people might say that Bitcoin is the killer app that extends from blockchain technologies. It's just like Amazon we had the killer app that extends from the internet and so on. But I don't really see why it's worth 100,000. What makes it worth that? Go ahead.
Killer app in Bitcoin is store value. There's other things. I mean, in terms of it being used as a medium of exchange is the last thing on the list, but yet the media always gets it wrong. and everyone thinks that's its purpose, but that's always been the last purpose. I mean, maybe 5 to 10 years from now, and enough, obviously in Japan, I think there's 200,000 vendors that use it as a medium of exchange, but that's still the smallest part of what Bitcoin represents. And the real value behind it, the killer app in Bitcoin compared to Ethereum and all the other crypto coins, is store of value because of the network effect and because of the way it's constructed, the way it's designed. 21 million maximum, you can't print more of it, you can't control it, you can't inflate it away. And right now, gold, I think, is about $8 trillion worth, but gold has a lot of problems compared to Bitcoin. Bitcoin does not have the problems gold does, and I think more and more people are starting to utilize Bitcoin as a store of value. So as that transformation takes place, I mean, even if Bitcoin achieves, say, 10% of gold as a store of value, that would represent $800 billion. Right now, what's Bitcoin worth? About 200 billion. So I think that in time it will start overtaking gold. It also is a good remittances, other functions. It can serve a purpose, but I think the real killer app here is store value. Now, as far as the bubble and all of that, I mean, it's had many bubbles. I think this one is significant in the sense that this is the first correction. It's real correction it's had since it topped in January of 2014. And I think a lot of, when you look at the corrections Bitcoin has, you can always point in the direction of usually government bans, government overregulation. You also have exchanges that were hacked. You have another number of assortment of bearish headwinds that create these corrections. China certainly tried to stand in the way. It tried to do that at the beginning of last year, and then again. And more recently, it's tried. South Korea has tried. But you also have countries that are embracing the technology, like Japan, and they're utilizing it to get ahead in the foot race. And there will be the new internet protocols that are going to come out as a result of blockchain. So governments can't really create their own protocol unless they want to get left behind on the internet space. So I think they have to, I think enough governments are realizing that. And some of the smaller ones certainly embrace this stuff, like South American governments, because in many cases their currencies are crapping out. And, the people of Venezuela, the people of Argentina, Brazil, etc., can utilize crypto technology to at least maintain the value of their savings, if not actually appreciate it. So we're still, Bitcoin is always, the crypto space is very volatile, as we know, and Bitcoin and the whole crypto space has corrected. It's no stranger to steep corrections. And right now, as far as has Bitcoin found the floor? Based on the technicals, I would say yes. However, that you have to keep in mind, you can have new news out of left field over the next several days and weeks that could force the price lower. But based on the technicals, I wouldn't be surprised if it just forms some kind of long basing period here, and then we start to it starts to go higher like it always has. Part of it, keep in mind, is that the network effect continues to grow. The number of people utilizing Bitcoin continues to increase, and the number of institutions that are starting to utilize it and trade it are increasing. The number of hedge funds is exponentially growing. As we know, it's traded now on various prestigious exchanges. So that should stabilize the value and help it to create a base and go forth once again. So my projection of at least a million by 2022, which is now 4 years away, that still stands. I have not changed that one bit. I don't see the space as ultimately shrinking. I see it as still exponentially growing. The baton could get handed off to something else, but I don't see what that something else is yet. I think the blockchain space is certainly going to be exponential as well, with Ethereum and all the other coins that are building on these different platforms. Ethereum is one of now, I'd say, a dozen different platforms that crypto technologies can build on. And they're all competitive. And Ethereum, if you look at Ethereum and Bitcoin, actually both of them, you'll see that the evolution within the code continues to occur. And Vitalik Buterin, who is very understated when it comes to Ethereum and very accurate, very precise about things, it's good to hear that the issues that Ethereum had are being dealt with and overcome. So I think we can see that Ethereum, if you look at the chart on that, it should, again, that probably base out for a while, and then at some point, I think it'll make to new highs. And I don't think we're going to have to wait to the end of the year to see that, because we're in February, and I would think this would occur, you know, within the next few months.
My own view is that I don't view Bitcoin as a store of value. I mean, how can something that was $20,000 a coin a couple of months ago be a stable store of value? You know, at least with gold, the fluctuation in price is a little more stable. So, I mean, to me, it's just a speculative bubble, and that's what it was, and it's going to have to settle out at some point. I mean, I really don't agree with you at all, Dr. K, to be honest. I think it's goofy, the idea that it's going to be worth $1 million a coin. I think that's BS. I think you're talking your book. You know, it's if you're long the thing, of course it's going to be worth $1 million. But I just look at it, and I've seen bubbles before in the markets. 2000 is an obvious one, and I remember so many guys, smart guys at the time, saying that, oh, this company, I remember those guys over at, what the hell is Arench and his buddies, he had hired $1 million internet analyst telling us why InfoSpace was going to be worth so much and whatever happened to InfoSpace. So that's what I think it is. It's a bubble, and it's popped. And it'll settle out like the internet bubble did, and there will be some value found somewhere amidst all of the wreckage that will emerge. But I don't know if you can say, oh, Bitcoin's going to 100,000 or it's going to $1 million. I don't know. Something's going to have to happen to the dollar.
Yes,
big way for that to happen.
That's my next point, actually. And first of all, if I had a Bitcoin for every time someone said what you just said, I would be worth over $100 million just on that alone, because there's so much. I remember back in the day, I had a projection of 10,000 on Bitcoin, and basically, you know, it was the same story. It was like, that's insanity. What are you smoking? The thing about the difference about Bitcoin, that compared to tulips, compared to dot-coms and all of that, is that that all of those other bubbles, and I love to study bubbles. I've studied hundreds of years worth of these patterns. When they blow up, that's it. Now Bitcoin has blown up something like well over 50 times since 2009. It's had that many huge runs and huge corrections, collapses, not corrections, absolute collapses where it corrects, you know, 93, 94%, but yet it somehow manages to grow again. And that is due, and a lot of it has to do with the network effect of it and the store of value. Well, by store of value, I'm not talking about its stability. You can utilize, arbitrage against. They have vehicles, so you can arbitrage the volatility away out of Bitcoin. I mean, they've had these vehicles for about 5 years now. So you can arbitrage the volatility away, but by store value, I mean, you know, it's still a little kid basically, and it's going to be all over the place. But there is an awakening of the fact that you can move money around you can move the money around and lots of it for very little cost. The transactions are very frequent. I mean, the number of people using Bitcoin to send to their relatives, say if you're working in Europe and you want to send back to Africa, that happens quite a bit, especially for third world countries, because Bitcoin helps the world's unbanked. And the number of people signing up for these Bitcoin wallets is in the millions. I mean, again, it's an exponential growth factor, because so much of the world is hurting because their governments are ineffectual and have done wrong by basically overinflating the currency. So you see your savings dry up to virtually nothing if you're in the wrong place, if you happen to live in the wrong country. And so a lot of these countries are embracing what Bitcoin represents on that nature. And you can look at the trends. You can look at exponential trends in terms of the number of people that utilize the Bitcoin network. Metcalfe's law comes into mind because the value of the network is the square of the people using it. And that accounts for a lot of the appreciation in Bitcoin. How it's gone from 0.001 back in 2009, that was the average price back then, to where it is today. And why it can correct 94% and still live to see another day and actually hit new highs after that point, because there's enough flow in the world, I think enough population in the world that is, it's like a wave. They see, oh, this is something they could really utilize, and so they do utilize it, and that Metcalfe's law kicks in. That's why I do believe we're going to see higher prices, but keep in mind that corrections of Bitcoin can be very sharp and steep, and that one that started in 2014 was a 3-year correction. Well, it was a year and a half of basically a downtrend before it found its low, and then the next year and a half it shaped the right-hand side of the cup, and then it was off to the races again, as we know, starting in January of 2017, even after the Chinese came in and basically attempted to ban the coin. So, and it also speaks to the dollar. That was your other point, was the dollar, we've talked about currencies because of the amount of sovereign debt out there. And I think that can be of help to the price of Bitcoin and the cryptocurrencies in general, because the world is not what it was. We're in a very unusual situation in terms of the amount of global debt out there. So I think that will speak volumes in terms. Oh yeah, what was it? Cyprus. When Cyprus happened, the price of Bitcoin shot higher. I think we may very well see other situations like that around the world. When you look at South American countries, I mean, even look at the EU. The EU is not real. It's. I think it's a failed experiment, and people have been talking about the dissolution of the EU. Giving it like a 5-year time frame. So I think there's a lot of headwinds coming at the planet, and it's not in a strong state given the amount of debt out there. That is true with even China. Someone is saying, oh, well, China's not in debt. Well, they are. They're in debt to like, what, a couple trillion. I mean, we owe them a lot of money, but overall, their net is negative. And it's what Armstrong is talking about. They're saying, he's been saying that every government is dead broke and hunting for money, and they're going to do it through the passage of laws, tax laws, any way they can get it. And that's sadly where we're at. But Sekoda does say, this time will come. The collapse, we call it a collapse, meaning collapse of various paradigms and systems will occur. But that's no reason to lose your head. That will be a great opportunity as a result. And I talked to him over a series of emails to eventually convince him that the blockchain technology is not about the dark web, and it's not about drug trafficking and terrorism and all that nasty stuff. That's maybe 2% of it. And I told him, look, the internet also has nasty stuff, but doesn't mean you throw the internet away. So I think that the changing transformative world comes at an interesting time, because Satoshi did create Bitcoin to deal with these sorts of corruptions around the world. He created it in 2009 after the 2008 financial collapse to address specifically what he didn't like about governments that would continue to control a system that should be made more dynamic and, decentralized.
Okay, well, nobody can say that we have a party line around here, that's for sure. So I still don't see it going. I don't know how it gets to 100,000 or anything, but whatever.
Yeah, there's two schools of thought. I like this because I think this makes this kind of broadcast really informative, because people you got to hear all the arguments and then you come to your own decision.
Yes, and I'm not convinced. So there. Anyways, let's answer some more questions. Let's answer some more. Somebody wants to know how my foot is. It's fine. I got it stuck in somebody's ass the other day, though. Let's see. I have to ask about crypto. Oh, wait a minute. With the stock market going to shiz, Bitcoin may get more buying. Oh, Scotty, you're talking your book, too. All right. Anyways, let's see. Looking at the charts of most.
What do you mean talking? Sorry, is that talking your book? What do you mean by that?
If you're long the thing and you've seen it come in a whole bunch, you obviously want it to turn. So you're gonna.
Oh, I'm in cash.
Okay, good. See, so you're in cash. You sold it. Okay, there you go.
I'm not talking my book at all because
You're not stupid. It's a trading vehicle.
Yeah, it was a few weeks ago because, well, basically what I had certain coins that were bucking the downtrend. So I'm going to continue to sit on those as long as, like Walton, you can look at the chart. You can see, wow, it was or Ben chain bucking the downtrend. So as long as that's going to happen, but then once those top performers started to go south, then I sold a lot of not just those, but I sold everything else as well.
Okay. Well, I'm satisfied.
But I didn't actually have any Bitcoin because you can make a lot more off the right crypto coins.
Yeah. All right. So let's see. Now we may be getting close to a low. This is going to be we're going to be down 2,000 points in the Dow today, and this will be your final low because somebody's asking for a short selling focus list. That would be an interesting one to pull off. Short selling is probably the most difficult thing, and stocks tend to rally more sharply than they do break down, at least today, the last few days notwithstanding. So that would be a tough one, things that you're going to be short forever as a focus list. But I would say, Tesla is one that we've gone back to time and time again. And it was a short yesterday, if you're watching it, down as it reversed below the 200-day moving average after earnings. I mean, again, they're not really doing anything special other than just losing money hand over fist. Cars are great, but there's competition from a practical standpoint. That's all starting to come to fruition. So I would say, that's heading lower. I think any of these names, if you were long them before, you just flip to the short side. I mean, that's what I've done with a lot of things. Facebook. I talked about this, I think, last week. When you're breaking down, it's a short at the 20-day on a rally, and then boom. So I'm actually short Twitter, and I shorted it up around 31, 38 or something like that. And it's coming in now because I figure anything that's up is coming in. You just throw darts. So here it is, 30.52, so almost got a buck on it. I think it's going to go negative by $2. How's that? Let's see. Blah, 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 blah. Let's see. What do we got here? But it looks like too late for short side. Am I missing something? Wow, look at them. They're plastering things now. Here we go. Somebody says here, oh boy, this is a long one. I'm going to text this question to you, Dr. K, and I'll let you answer it. Does that sound good?
All right, sure. Yeah.
Let's see. It's kind of right up your alley.
You chat it over.
Let's see.
Or email.
Let's see if it works. It's a pretty voluminous one here. Here we go. Where are you? Where are you in the text? I am more. There we go. Not happening. All right, let's try this again. All right, here we go. Here it comes. You ready?
What chat? What are you using to send?
Google Chat. So it's a question.
That's weird. I see you typing. Are you just slow to send?
I texted it to you on Google Chat. Do you see it? Oh, there it goes. Sorry, didn't hit the enter button. Silly me.
So okay, I'll read it. This is the first time in the current cycle that the stock market has sold off more than 10% with no meaningful impact on rate hike expectations. In 2010, 17% decline pushed back hikes, and the Fed came in with QE2. In 2000, okay, right. Okay, so he's making the point that in various years, double-digit declines caused the Fed to act with either QE2, Operation Twist, QE3, etc. So he's wondering why the Fed is not coming to the market's rescue. Well, keep in mind that we're just at 10% here. So I would not be surprised for, if this gets much worse, for the Fed to come in and say something in the vein of, well, maybe we're not going to hike as many times as we thought. I don't know. They have to do something to avoid this QE bubble from bursting, and they know it. So I would watch your news feed, because I would think that the Fed is going to have something to say about this correction, because it's not your run-of-the-mill corrections. Keep in mind that the last time we had a serious correction in the markets, the last two times, that was in January 2016, and I'm just looking at a weekly chart here. It was January, and that was due to China. Actually, it was also in August of 2015, January 2016. Both those times had to do with China's issues. This time, it's not a Chinese issue. And if you look at the weekly on the S&P, it's really ugly. So we really haven't had a correction outside of China being the reason. This is actually context. It puts this in a whole new light. This is a brand new type of correction, because prior to August 2015, any correction, as he points out, was talking about basically the Fed coming in and saying, okay, we're going to go easier on rates, etc. Yeah, well, the Fed stopped QE altogether. The U.S. Federal Reserve, in when, August of 2014, I think, and that caused a correction of some sort. But then the markets got back on footing because central banks around the world were continuing to print. And prior to that, this number is correct. If you look at 2011, 2010, etc., these deep declines came in with the Fed to the rescue with Operation Twist or QE2, QE3, etc. So I think this is a very interesting time. I'm glad this person sent this, because it's putting this correction. If you look at the weekly on the S&P, just pull up a weekly on it. And
I'm sorry. I'm over here. Look at, what do you want me to look at here?
S&P weekly, and
go back to where?
Stretch it out so you can see it in context with 2000 and
okay,
with all the way back to 2000 and, well, at least 2014, and you'll see this thing is pronounced. I mean, it's a fast, very fast sell-off that's happening here compared to the other years. Like I said, 2015 and 16 were China related. 2014 was, I think, the markets were upset that the Fed was going to stop QE altogether, which I think they did in August. 2011, that started Operation Twist after that big drop there. You also had QE2, I think, in 2010, something like that. So you always had the Fed to the rescue, and this time we're having a correction that has nothing to do with China. I think it's more of just the interest rate. Everyone's spooked by higher interest rates, and they're also spooked by the markets being up this far after all these years. Spooked by the unemployment data, which might not be legitimate. Inflation data, which might not be legitimate. I should not say might. I don't think it is legitimate whatsoever. So the markets are smarter than governments, and they're telegraphing there's trouble ahead. So to the person's question, I think that they're going to have to step in within the next few days and say something to prevent the markets from completely unraveling. They're probably scrambling right now as we speak.
Probably are. Anyways, let's see. We're down 390 on the Dow. Nasdaq's down 2%. And like I said, I think you're going to have to be down 2,000 points by the close. I'm noticing Twitter keeps reversing. That was even a sloppy BGU yesterday. We talked about this in the morning, didn't we?
Yeah.
And we didn't put it on because we felt it was sloppy. Same reason for Snap. And Snap reported a loss, right? 13-cent loss. Yet that one keeps going higher, whereas Twitter looked more legitimate. posting a 19-cent profit, its first profit ever, and it opened up at what, 34, I guess, ran up a little bit and then just collapsed, and not looking so hot. Anyways, let's see if we got some more questions.
S&P is right at it's trying to bounce off its 200-day right now.
Yeah, that makes sense. I don't think it's going to make it. I think it's going to briefly bounce and then head lower.
That's my guess.
And then what'll happen there is it breaks the 200-day. Everybody's going to talk about it. Oh my God, this is a bearish development, and it'll undercut it by another % or two, and confirm what everybody's thinking, that this is major support being broken, and then maybe we'll get a bounce there. Now let's look at what the Nasdaq's doing right now. The Nasdaq is starting to undercut these lows from I guess that would be November, and approaching the 200-day moving average. So you're getting close, but I'm guessing you're going to undercut it just a little bit by the end of the day, and you're just going to collapse into the close, and that's going to freak everyone out. And all the pundits will, like I said, talk about how bearish everything is.
The VIX keeps going higher as well, even with the bounce on the S&P. The VIX is still now at intraday highs, 37.57.
Yeah. Somebody's asking, is it too late to short stocks if they break the 20 or 50-day? Well, the further down in the pattern you're shorting, the higher your risk. So you're better off trying to get good entries rather than just shorting things as they're breaking down when they're this far down. I mean, they could continue going lower, but I would already want to be short and be looking at where I'm covering rather than wanting to jump in here, because a lot of things are down there. They could go down further, and I think they probably will. That's my call, for the end of the day, that we're going to go a lot lower. We'll see if that actually comes to fruition. But they're trying to bounce this thing. Man, look at some of these things really coming out. Square's getting creamed. I mean, everything is just getting roasted. It's pretty nasty.
135 on the NASDAQ, 135 up, 1904 down.
Yeah. I mean, if you're looking for a short, I was looking, whoops, that's not the chart I want to use. Let's go back over here. Here's one that was up in the pattern, and it's up there at the above the 200-day. That could be possibly shorted if you're looking for something, say, fresher and up further in its pattern and riper to fall. I'm actually short some of that off the peak, so up a little bit, about $1 on it right now. But it's been holding up. These guys came out the other day, and we put a pocket pivot report on it. Here it's a bottom fishing pocket pivot, and that worked for a couple days. But you notice it's stalling up here. The volume's running out. So I think if the market comes in, you're going to see this come back, and it could test, the top of this zone here down around $52, maybe. So that's one that you might look at. And I think if you're going to short, you're just looking for the next shoes to fall. So, and I think to a large extent you've already seen a lot of that. So I mean, Amazon I thought was a short at it's going to bust a 20-day and test at 50-day. I mean, I think we even pointed that out in our focus list notes. Pretty obvious that that's probably what it's going to do, and sure enough, it does, and it's coming back into the 50-day line and the top of the base. So still looks a little bit. It could go through the 50-day and come all the way down to the top of the base. So who knows? We'll see what happens. But I think that's what you're looking at. Dr. K, what is the story on Riot? Does a recent move to acquire a brokerage change your opinion?
Recent move to acquire what brokerage is this?
I don't know. I guess you could check out the news.
I don't see why acquire. Does he mean an online? Is he talking about a crypto exchange by brokerage? So in other words, if they're acquiring presumably a centralized exchange like Bitstamp, something like that. That doesn't excite me whatsoever. I mean, it's great to have an exchange that's doing a lot of volume, but they're not the cash cows. I mean, they're okay. They're certainly they can make money, but that's not where the sweet spot is by any stretch of the imagination. So if they went ahead and bought an exchange, that's not exciting to me. If they bought some legitimate crypto companies that have massive disruptive potential, that would excite me. Then it would make Riot a legitimate acquirer of good technologies, but they haven't done that. So I don't really expect them to. Unless they change the business model around, I wouldn't be a buyer of this at all. Stay away.
Yeah, I'm looking at the news. What was
okay, let's see. Riot blockchain is it sets a deal to acquire digital currency exchange, to acquiring Logical Brokerage Corp. Yeah, I'm just not. It's okay. So they're acquiring a cryptocurrency trading firm. So that I take it to mean that this company is, well, I need to look at this company a little bit better, but it sounds like they offer a trading platform. So people can trade cryptocurrencies, and therefore they're like Bitrex or Bitfinex, Poloniex, which, again, they're a viable business. They're great businesses, but it's not the heart of it's not the sweet spot by any stretch. So I'm not real excited about that news. It doesn't seem like the markets are all that excited either, because if you look at the daily chart on Riot, it looks like it bounced briefly. Yeah, no, I think it's probably going to be more of a dead cat bounce than anything. Certainly having an exchange under your belt is a step in the right direction. It's not a bad thing that they've done. I think it's a good move, but they need to get more exposed to the blockchain companies that are actually doing viable things with blockchain, and I haven't seen evidence of that yet.
Anyways, okay. Seems that up volume on the NYSE and NASDAQ is not as unbalanced as the advanced decline. Could this be an indication of accumulation into this weakening? I don't know, but I don't think I'd base a buying decision on that solely. So, is that true? Can you check that, Dr. K?
Say that again?
Can you check? It says here he's asking. Someone's asking. It seems like that. It seems like that up volume on NYSE and Nasdaq is not as unbalanced as the advanced decline line. Could this be an indication of accumulation into this weakness? Hard to say. I mean, I don't know.
I see what they're getting at. You can't really the up volume, down volume. It's still pretty bad though, and I wouldn't use that. I wouldn't put too much weight on that. I mean, the difference is, I wouldn't. Generally, when you see an extreme like well, we almost saw 10 to 1 on the advanced decline on the Nasdaq, for instance.
Yeah.
And you're not going to see generally 10 to 1 in volume. The volume is not as extreme in general. So what I'm seeing here, for instance, is up down volume is 3 to 12 versus, well, right now it's about 3 to 17 or something on the number of names. 268 advanced to 1765 decline versus the up volume, down volume, which is about 3 to 12. So that it doesn't seem out of line.
Yeah, and I wouldn't be basing a buying decision like, okay, I'm going to step in and start buying here because I see that. I think you got to see where some of these stocks bottom. We saw the S&P bouncing off of the 200-day line. You can see that here. But like I said, I think you might get an intraday bounce and then see if you roll over again. I think that's a possibility. So I'm not saying I wouldn't necessarily say we're out of the woods. I think the scenario I was looking at earlier is possible and more likely because that would really get everybody extremely bearish. And the bottom line is you're only 10% off the highs. So, this could get a lot uglier before it gets better. So I think the bottom line is if you're looking to buy, I don't think this is the time. If you're looking to short, most things are down in their patterns. You should already be short and looking at where you're going to cover. If that makes sense. And or you put out some shorts this morning into the bounce. Although that was a little bit weird, because I was even like, yeah, a little bit off balance because you had things starting to, you had the big breakdown all of a sudden earlier in the day. I think the Dow went down, 200, 300 real quickly, and then it rallied off of there sharply. So it looked like everything was turning and things started to turn, and then they rolled over again. So even that's not, shorting isn't so cut and dried in this environment. It's very tricky. Anyways, that's all we got, you guys. It's time to it's after 10 o'clock our time, so time to end the webinar. So I think it's just bottom line is stay alert, and you probably should be mostly in cash right now. We'll see where this thing bottoms, and that's basically it. So anyways, that's all I've got. Dr. K?
Yeah, I think we're good here. Maintain. You got to be nimble if you're going to play this market, and if you're going to play it, you better know what you're doing because it takes no prisoners, and especially with all the riptides out there, expect a lot more volatility ahead.
Definitely. So anyways, all right, thanks for showing up, you guys. We'll catch you next week, and good luck.
So long, everyone.